Good morning, SMF Pro Trader seniors, students, everyone around the world and alike. Is that we're going to talk about some questions this morning that was asked to me by a new school student. And how can you tell what the market's going to do today, Mario? Well, I'm going to answer this question this way. This morning, there are key elements that we look at when we look at it. We look at where the futures market is in the morning, as are the futures gapping up, which gaps up stock prices, if the futures are gapping down. If the futures are weak, that means that the opening move up to resistance, stocks will be sold short, whether that's for 3 minutes, 12 minutes, or whatever the case is. What has happened overnight prior to you coming here and other parts of the world affects our futures. That's another thing. And what is the worldwide headline events? What is the currencies? What is the current commodities? There are lots of different things that you will be taught, but only 4 that you need to be taught. And that is where the futures are, where the current trend cycle is within the indexes, and where gold is, silver, platinum, and palladium, and these kinds of things are, and copper, because you want to know where the market's getting support. And there are certain sectors that will provide support within the broader indexes. And basically, we look at the broader markets worldwide. Shanghai, Bombay, South Korea is all down, where Hang Seng and the Nikkei or whatever it is, it's slightly up. The FTSE, which is the European markets, the DAC, FTSE, the DAC, and the CAC, they're all up. They had a relief bounce. They followed the U.S. yesterday. So basically, the overall market, called worldwide emerging markets, is another key factor that we look at. This is a NASDAQ chart right here. So just because a stock bounces off of a lower support level back up to the higher resistance level, that is where you wait, and the short trade is still in play. Trends don't go straight down. However, just like Apple Computer did yesterday, we got hit at 195.98. It dropped down. Traders got that. We bought calls on Amazon at 450 yesterday, and we sold them. And we, all of our traders, there was a total of 500 of those contracts that were traded, and there was a $2 move, and that was a $100,000 trade across the board, not for me myself, but for everybody involved at SMF. And it was a very glorious day yesterday. And the other part of the glorious day yesterday was the short sell on Amazon, because it went up in the morning, put in the high, and then dropped, and it had a $16 round trip movement. The volatility is here. It didn't leave. So we know that the current state of the trend with the double top reversal on these indexes, that the counter trend and the bear and the bull to this counter trend. So 3-week selling, counter trend starting on the week. Today is day 2 of the week. We got overhead resistances that will be tested, and at that time we would be shorting into these resistance areas, because the trend, the state of the current state of the SMF Pro Trader trend is weak. And as people learn how to use our system, will not run you down the wrong way. You can be analytical about it or whatever. We'll just have to show you how accurate it is. Eventually, what will happen is people will surrender to it. Then they're going to want to learn how to use it. Once you actually have it in your hands and you got your direct access trading platform up and you have that on your computer, it's going to be a lot easier for you to understand this. only because you're engaging and working with it, and you'll see more of the accuracy. So, but we're really talking about that we're going to look at half of the weekly bar on the NASDAQ, 2187. That's going to be the short-term resistance, which is last move down. 200-week moving average, any spike into there called a spike, volatility spike, into resistance will be sold short. Volatility spikes are created to bring buyers off the sideline. That's what happens. The SMF Pro Trader, on the other hand, will be very grateful to short into that move. That's the NASDAQ. Same thing with the S&P. S&P has a 3-week reversal, and the counter trend is between bear and bull trend is that either the bear gets control at resistance or the bulls step up to beat the bear down and they push through. Yet to be determined, but any pass up on the S&P to the 10-week, it's below the 20-week, any volatility spike in the futures, we are sellers into that, whether you like it or not. Remember, people, a volatility gap why is it called volatility? Well, because it's an artificial dollar price movement in the futures up to that resistance level where the market makers and people like me whack it short and the rest of the public want to come in and buy. You've been given a gift. NASDAQ 100, 3-week reversal. The counter trend, as everything has a counter trend, but it's the momentum, half of the weekly bar right there. It's below the 20-week. That's half of that week, 1772. That's where we got overhead resistance. On the little Dow 30, which is 30 stocks, doesn't take much to manipulate 30 stocks, does it, Mr. Plain? The Dow, remember that prior trend reversals within the longer term trend, we were going way higher. Now, a lot of current events have happened. So we are going to draw a trend line right there, half of that weekly bar. That's going to be resistance on the Dow, 10,386. That's your upper end. We will see how the buyer is the bull and how the bear, the seller, and where that dollar or that volume kicks in at that dollar price movement. Dollar price movement on the equity, where the buyer, the bull, or the seller, the bull, and who wears who out. Upper end of resistances is that the trend is weak. When the trend is weak, when equities go up to the higher end of resistance, they need to be sold short. When the trend is strong, on just an example, is that when the trend is very strong in a cycle going up and you pull back a couple of weeks, you want to be very aggressive buyer because the bulls are in there. And the bears did not work. But guess what? This is the first time in the trend cycle that the Dow has had a double week below the 10-week, and the 10-week is kind of pulling over. And now we're below the 20-week. The 20-week is more significant because it's 20 weeks of open, high, low, close, price, volume. And 10 weeks is just the same. So basically, as we look at the volatility, is that volatility off support, but volatility off resistance. If we buy off the bottom, we know that we're a seller into the move on an intraday level. So if it goes up 12 minutes, we're selling into it because the trend of the indexes are weak. Another thing to answer Mr. Carr's question is defining the sector that you're trading. There are 16 sectors with sectors and indices outside of the 4 horsehead indexes that I'm showing here. Is to establish, if you're going to short a stock, take an internet index. If the internet index is selling off and is weak, then you would be selling short internet stocks up at resistance. Anyway, these are key things that we look at. The state of the trend has not changed. It's a counter trend reversal, and we need to monitor just knowing that there is major resistance on all 4 indexes. That's what I got to tell everybody.